Hello, everybody, and welcome back to Chart Request Live. My name is Patrick Dunawilla. Joining me today, we got Sam Gatlin. Sam, how you doing? Happy Monday.
Happy Monday, Patrick. I'm glad to be back.
Yeah, it was not a great start to the week. It wasn't a great week last week. We S&P continued lower for like it's been down like 4 out of the last 5 weeks. Um, Ended on the lows of the week. It was a new like post-election low, and here we are. We gapped lower. I think we've closed that gap. We're trying to rally back a little bit. Dow's positive. Other three are still negative, but trying to make it back. What do you think?
I think the dollar has to be front and center. I mean, this thing has absolutely ripped. Since the October low, it has rallied about 10%. And like for us that are jaded in the stock market, 10% sounds like nothing, but this is not the stock market. This is
Right, right. It's
orders
not
of
the same.
magnitude more important than the stock market. This is how many quadrillions is the FX market? It's a lot of them, right? And then the stock market is not. So I think this is really what's driving the selling pressure across the board.
Yeah, and I'll take it a step further and say it's really yields, and I think the dollar's trading on what's going on with yields right now. So I mean, you're absolutely correct there, but um, I think yields are really pushing on risk assets across the board, not just stocks, but crypto, gold. Gold is I think selling off a little bit today, but it's
It's been
also been in that
relentless.
consolidated.
So what do you think about 5%? A lot of people are talking about 5% in the 10-year yield as potential resistance. I don't really see a reason for it to stop there for too long. What about you? Do you think we need to have more of a significant correction once we get to that level?
Yeah, I mean, I'm more so watching this 4.7 level, and then if we can really, and which we are breaking it, then 5%. And I think it could act as resistance. I think seeing it just rip right through might also be a little bit of too much too soon. But maybe you could also have a scenario where you break out and then it fails, which would be probably coinciding with a nice bounce for risk assets. But we'll see. I mean, what's really important here is also the speed at which a rise would take place. I think the faster yields get there, if they do test 5%, I think that would be even more troublesome. So
Right. Since the Fed started cutting rates, was that late September, early October?
yeah,
Something like
right.
that. It was around this time when the 10-year was bottoming.
I think it was like the day after or day of, right?
Exactly. Since
Yeah.
then, the 10-year has ripped 33% in basically a straight line.
But I gotta say, I think, given the dollar and yields, right, the two wrecking balls from 2022, they're doing that. And meanwhile, S&P is only off 5%. Now, I know the carnage is way worse under the surface. Average stock is off like what, at this point, probably 20% maybe. So there is this correction under the surface. But I think you could also look at what's going on in yields in the dollar and say, okay, if that does mean revert, then um, S&P, that could easily bring S&P back to all-time highs. Still a lot of damage beneath the surface, but um, I guess that's the magic of the S&P, right?
Definitely it is. Yeah. Mega cap tech has held in there relatively well. You know, you've seen some of these more speculative software stocks get blasted pretty well. I mean, how do you not talk about quantum computing stocks getting
Oh,
absolutely obliterated?
oh, I know. I mean, I think last Tuesday was the day before they all got executed, right? And
Right.
you and I were on here looking at a few of them, or last Monday, I'm sorry, whenever it was. It was right before they all got executed, and that reversal happened quick. I mean, 50% haircut like that. People say it was on Jensen Wong's comments, but we also got to keep in mind these things were up 100, 200, 300% in the weeks leading up to that comment. So, was it really Jensen's fault? Who knows?
Yeah, I think they were ready to be sold off, and investors were just
Right.
looking for a reason.
Right, and someone could have sneezed and it would have sold off. But anyway, we got a really packed mailbag today, so
Let's get to it.
didn't have a show on Thursday, so let's get to it. Riot. Let's start off with Riot blockchain.
So I think we got to start with Riot relative to its peers, which is WGMI, the Bitcoin mining ETF.
Hey, that actually looks pretty good.
It does look pretty good. Yeah, so this is what we're looking at here is this pretty textbook reversal pattern. You bottomed in July and you've turned sideways for several months, and now here you are making new. How many days is this? 151 trading sessions, 222 days. That's a pretty significant new high. So I like Riot just from a relative strength perspective. Now in absolute terms, looks like a real headache to trade. I don't like the look of this.
Well, and Sam, a lot of this is at the mercy of Bitcoin, right?
Yeah, I think that's a really important caveat that and it's not only Bitcoin, but small caps too, I think have a good influence on these stocks. Gosh, I don't know what you do with this, Patrick.
It's just kind of a mess. I mean,
It's such a mess.
maybe drop a WAP or something.
Yeah, drop a WAP from this prior cycle high. I think that's a good starting place. That comes in. Yeah, I like that. So buy strength above this pivot high.
Well, let's also think about risk to the downside too. Let's say you've been sitting in this one, maybe you're on some nice gains here. Where do you call an out point? Where do you throw in the towel?
I would put a stop at the pivot low from December, so that comes in around $10. So
couldn't be a more important psychological level than that, right?
Right. Yeah, and I think we got to pull up the Bitcoin chart as well. Like, if this is resolving this potential distribution pattern, it doesn't necessarily mean the trend is over for Bitcoin, but is that something you want to have exposure to at the moment? I don't know. I think that's a tough trade.
Right.
So I think that is the context here. So you have to expect this one to gravitate closer towards $10 than 15 or 16. But I think you could buy strength above the pivot highs of this range. I think that's really the move here. Is this is just one big range, and
yeah.
And you want to be short if it breaks lower, and you want to be long if it breaks out. I think it's as simple as that.
Yeah, you're looking at it like one big giant flag, kind of.
Yeah, it's really messy, and this is a really volatile stock. So for a range to be 30+% is perfectly normal for this type of vehicle. Yeah, let's move on.
Let's move on. Oracle, time frame is 6 to 12 months.
Yeah, so this one is making new.
Trying to hold that gap as best it can.
That's a pretty significant gap. So it's making new 100-day lows here, trying to fill this gap from its Q3 2024 earnings report, where it rallied, let's see, about 11.5% in one day. So that's a pretty good earnings reaction. So you'd anticipate some buyers to step up here at this level once again, but that is a ways away from current prices. So I think this one has about 6, call it 7% downside remaining. But if it gets to, I think you could call it 145, just a nice round number. 145 is the level to buy at, and know that you are buying weakness. You're probably not gonna hit it. It's not a high likelihood bet, but I think that is a well-defined level of interest there if you are interested in this one.
Yeah, and it kind of did the same thing back this summer, with its earnings gap, where you had the earnings gap and then it came back and filled it there, and then it took off again.
That's perfectly normal behavior too. Just backing and filling it. Um,
Right, right. And then gapping it again on the next earnings report after it fills that gap, maybe. Um,
exactly.
let's move on to energy stock. One bright spot in the market. We got Slumberjay, Slumberger.
The Slumberger.
Yeah,
Yeah, she's a beaut. So, yeah, not sure what to do with it here. I think you could take a little retracement of this. Yeah, let's call it this 43 level. This is really a level of interest that we want to
yeah.
participate. Um,
Looks like it came into play in 2018 there, right?
yeah, this has been an important level, many occasions. We could call this the low of the Great Financial Crisis as well. It's kind of messy, but it's in the ballpark. So there are a lot of bag holders that are selling on this one right now from this prior cycle. So that is what's been going on here. It's been absorbing overhead supply, and this is the process of that. And it's a messy process and not something that I'm terribly excited about participating in. But once it does absorb all that overhead supply, you can get a really, really nice reaction leg higher. So if we want to bet on that happening, I think you need to see this one close above this VWAP anchor to the all-time high, which would prove that the bulls are taking control of this in the intermediate term. But if you were wanting to jump that, I think it also makes sense to get involved at this 43 level. So 43 to 47 and a half is your trade there. And then above there is when it really gets exciting. I think 47 and a half gets you to 62, really. And yeah, what do you think about this chart? Would you mark it up any differently?
Yeah, I got to tell you, my favorite part about the chart's probably that weekly RSI, just refusing to get oversold there, and it's just nicely, yeah. So the whole
That's a
time
really
it's
great
been
point.
below 43, it's just been putting in these nice little higher lows there.
Yeah, no, like this is coming in the context of a massive uptrend.
Yeah,
This is
and
what you're
that
talking about.
RSI thing, that's really something that's going on in energy more in general. You look at a lot of charts in the energy space, and weekly RSI just hasn't been oversold since 2020, since crude oil went negative.
So it kind of suggests that this is more of a continuation pattern than a reversal pattern, right? Is you'd
Yeah.
expect another massive leg higher out of this continuation pattern, but
Yeah, and you
it's a
said it
matter of getting that
just a
leg
messy
started.
process.
Yeah, it's really, really messy.
Yeah.
This
All
kind of looks
right.
like the Oxy chart, honestly.
Yeah, yeah, it does. The similar needing that scoop and score kind of to play out. Yeah.
Right. Yeah. Oxy's a lot cleaner, but
So this one's coming from Andrew in the mailbag still. He's asking about Square and PayPal. Now, they're both kind of similar, so either one.
I like Square more. That's a cleaner chart. You have a clear level to define your risk at. It's let's call it 90. You could call it 90 to 95. It's kind of a range there, but it's still far better than PayPal from that perspective. So above there, I think you want to bet on a stage 2 uptrend phase beginning, and that could take it all the way back to 290. But I think the first stop would be this 135 level. You also have 194 former support. Likely
This
to
thing
turn
looks a
into
lot like
resistance. There's probably some bag holders up here if I were a betting man.
this thing looks a lot like ARK, doesn't it?
It does. It definitely does. I think it's a
And of
large
course, Square
component
is
in
a
those.
significant holding in ARK, so not a huge surprise there, but
And it is a laggard relative. Like this is probably the best ARC fund, the ARC W. This is what we're talking about. This one has already completed that reversal pattern and is making new.
I was more talking about ARK, the flagship, but
Sure.
yeah,
Yeah, it does look like that. Yeah.
just in
Let's
the way that
see.
it's kind of holding that VWAP there.
Yeah. So relative to that flagship fund, it's just not a lot of directional
Yeah,
bias here. It's more of
nothing.
a range bound mess. Not a
Yeah.
whole lot of alpha in Square.
Any thoughts on PayPal or?
Yeah, it's the same trade really. Let's benchmark it to ARC as well.
This one couldn't even get above its VWAP though. What do you
So
think of
this one's
that?
even worse actually than the square block. Uh, and yeah, you pointed out this VWAP from the all-time high. Um, Square got above that and has fallen below, but PayPal never got above it. So um, that is just speaking to the relative strength of Square relative to PayPal. But really, this one, I think at this point, you don't want to touch it until you get a close above these pivot highs from August 2022, which, if you market historians remember that time, it was a pretty significant time in the markets. You'd imagine there's some bag holders there from August.
Yeah. Um, so let's try to rip through what we got left here in the mailbag. We got BN. This one's coming from Jeff.
Brookfield. Hey, now we're talking. This is a good looking stock. $83 billion investment management company. Really nice chart here. You have a long-term uptrend. So since this one went public in 1976, it looks like it's up over 100,000%. This one's been a huge
What?
winner.
Wow.
A real beast. So we could
That's
fit
like hard
out.
to even conceptualize.
Yeah, it is. That's a big number. So this Fibonacci extension from the Great Financial Crisis is coming into play. That was the peak in the prior cycle. We have exceeded that now. So call 49 our our stop level. We don't want anything to do with this below that 49 level. We are above that today, so I think you could own this. But if you're looking to buy it, I think it's pretty difficult at current levels. I think you want to see it fall further towards that former resistance, which theoretically could turn into support now. So call it 49.50 is where we want this Brookfield. Good looking chart though.
Yeah, what a long-term uptrend. So this one, it looks like an MLP, HESM, Hess Midstream.
Yeah.
This one's from Mark. Caught my attention with the new relative strength in oil and commodities. No position yet. He mentioned a target of 41 and a half.
He's probably talking about I don't know what he's talking about. Here's how I see it, man. I want to fib out this COVID drawdown, which was just so disgusting. You fell like 80% in a matter of days. So that is an amazing time to fib from. And sure enough, this 161.8 extension is coming into play. You found resistance there back in July. You've been consolidating there since then. So I think the play is to buy on strength above these pivot highs. I like using a line chart here so I can use closing prices. But that 38.5 level is a big one. If you close above there today, I think that would trigger a buy signal for me. And that would give us a target of 41.5. Is
Yeah,
that
I
what
think that's
that's
I
what
think
they talked
that's
about?
yeah. But that obviously doesn't give you a ton of great risk and reward. So I think it makes more sense looking for that longer term fib from the base that you had, the 2020 decline there.
Yeah, no, I think you're absolutely right. So let me redraw that real fast. We'll use closing prices for this exercise. And 37.5, we can really just call it 38.5. Use those pivot highs a little bit cleaner. But from there, I think you could sell this one at $57. That's not a bad trade. That would be
I don't know.
about just shy of 50%. It could happen in a matter of weeks to months.
That's a 7% dividend yield.
That's pretty nice.
Um,
It's $8.5 billion too.
Yeah.
Nothing to sneeze at.
Hey, speaking of relative strength, this was one I was in a while ago, got stopped out, but man, it's made a nice comeback here. Vital eggs.
Yeah, eggs
Yeah,
are so
organic eggs.
back. I love this vital chart too. A little bit of a cup and handle-ish type
Yeah, had a
chart.
nasty fail breakout, and patterns morph all the time. And this one went from a base, made a little cup and handle thing over the last what, 6 months, 7 months, 8 months.
Right, yeah. And I think this one is, let's see. Yeah, just shy of $2 billion. But if you look at Cal Maine, this one is quite a bit bigger. It's more than twice the size. Um,
Are egg prices going up again? There's something going on there.
yeah, there's some type of disease that's messing up the chicken population, and therefore pushing the price of eggs higher. But
Hey,
really, this
short interest is still 17% on this name. Not bad for something that broke down and then made its way back, right?
yeah, for sure. Um, yeah, I like this calm. This one has been the leader. I think we should benchmark.
Oh, I'm sorry. I was talking about Vital for the short interest.
Okay. So calm relative to vital. Really not much there, but we were asked about vital, so we will chart that out. And I think you want to fib from that IPO back in, looks like the summer of 2020. Fib it out to this June 2022 low. You had
Dare I
about
say it, Sam, this chart kind of reminds me of Hims and Uber, a few other ones.
yeah, let me overlay the hymns with it.
Kind of even Sprouts. I don't know. I mean, I'm talking about before they broke out, but
Mhm.
um, yeah, I mean, clearing
This
those.
just screams accumulation, doesn't it? Like
Totally.
it
Yeah.
just, yeah, this one doesn't look like it wants to go lower. It looks like it wants to
Right.
go higher. So,
And it's told us that, right? I mean, it had the chance, and
right, exactly. I love the cup and handle pattern too. That's such a great pattern to trade. One
yeah,
of my favorites for sure. And you also have a really, really clean level of risk here. I think 43 and a half is where you want to get involved. From there, you can target 65. So that's about 50% of upside. That's a hell of a trade.
yeah, sure
Bullish
is.
chickens.
Polish chickens for sure. I hope they. I was gonna say I hope they get over their flu, but these prices might not be working the same way as they are.
Yeah.
So anyway, let's move on. We got a couple more here. We got a hard out at 1:30 today, but Daniel in the chat here is asking about GME relative strength.
Yeah, I'm not sure what relative strength
I mean,
looking at.
listen, it's weird to say the words GameStop and relative strength in the same sentence, but it's I could see it. I mean, it's had some days where it was kind of working towards multi-month highs while the rest of the market was selling off, but yeah.
That is kind of interesting. Yeah, I've noticed like my freshly squeezed universe on gross days will be largely in the green.
Yeah,
It just
that was
speaks
the
to the
weird thing
market
about last
environment.
week is you had like as bad as small caps were, like Russell 2000 was the laggard, but you still had some weird small caps like the junkiest doing okay. It's kind of weird.
Right. Yeah. It doesn't really speak market top to me, but
Yeah.
that's neither here nor there. Let's talk about GameStop.
Neither here nor there. Yeah.
Um, I think you could. How do you get involved here?
I
I
mean,
guess.
this one's just been it's been tough. Yeah. I mean, this one is just I've taken it kind of off my radar, but
And like when it's gonna move like in several days. Like look at
yeah.
you're kind of betting on another one of these happening. Like you get a massive 74% candlestick and then 60 right after that, and then boom, you're out of the trade. Like
Right. Yeah, it
so,
could happen in one day, right?
Yeah, how do you time that is the question.
It's really tough. I mean, I have the same VWAP drawn there. And it is kind of interesting that it's hanging out above it, especially with the broader market kind of selling off. But I don't know, man. Yeah, this one, like, we're looking for trends here, and this thing is like it trades like the VIX, right? It's
Right.
like it'll
That's a
just shoot
great
up and go
comparison.
up.
Yeah,
Yeah, it's a tough one.
definitely. Yeah, I think you could define risk at 36. Why not? From
Yeah,
there, you get 64,
yeah,
65.
that makes sense.
Do you think this one ever revisits the 2021 peak?
Oh
We see
man,
$100 GameStop again?
in our lifetime,
Yeah.
um, if it does, it'll be really interesting. But I don't know. There's a lot of dead bodies there, right?
Yeah, a lot of
I mean,
enthusiasm
were you
around this
still in
one.
college during that whole saga? What was your
Yeah, yeah,
during
I
that?
was. Yeah, I was
Yeah.
not involved.
Oh, good, good.
I watched the
Um,
movie. It was kind of a weird movie. Have you seen that, the
no, I
GameStop
haven't.
movie?
I haven't seen it yet. How is it?
Yeah, I wouldn't really recommend it, but I guess it
It's
is
called
kind
Not
of a
Funny,
cool
right?
story if you haven't heard the story of GameStop. Which, if you're
Wait,
here, I don't know how
if
the
you're
hell
watching
that's
this show,
possible.
chances are you're
Yeah,
probably very familiar with GameStop.
exactly. Yeah, I cringed pretty hard
Yeah,
throughout the movie.
yeah.
But yeah,
Um, well, listen, let's take a couple more and then we'll shut it down for the day. Wavy, we got to look at Wavy's pick here. Long ENB. Was that Enbriar? ENB?
in
Enbridge.
Bridge. What
Bridge.
is this? Oil and gas pipeline, 136 billion
Oh,
dollars, 6% dividend. So for you dividend collectors out there, this is not a bad candidate. Pretty nice base here. So I think we got to talk about this uptrend that it had from 1999 to 2015, rallied about 1,000%.
look at this thing.
Um,
I mean, that's a 10-year base right there.
yeah, yeah,
Yeah,
yeah. This is
Wavy's always bringing these out of nowhere gigantic bases that I haven't seen. So, thank you, Wavy.
Yeah, big shout out to Wavy, bringing the heat every single episode. He doesn't miss one.
No.
Love you, Wavy. So I think let's use a daily, no, let's call it a weekly line chart, I think is how we're gonna fib this one out. So at this point, if you're not involved, I think you want to wait for a close 84 level. So you have about 25 to 30% upside once it closes above that 65 and a half. But for now, I don't think there's a lot to do here. I think the trend is pretty decisively sideways for this one. It has been sideways since 2015. So to bet on a new uptrend is a pretty big ask. I want to see this first.
You got to see the proof.
Yeah.
And we've seen a lot of those, the biggest and the best bases, like the Vital, where it fails initially and then builds a nice, more sustainable like handle. And that's actually kind of a positive thing longer term, but it sucks if you buy the breakout initially, right?
Exactly. Yeah. This one, yeah, I think it needs more time, but I definitely see the vision here. This is a beautiful chart.
Yeah. No, shout out to Wavy. He's always, like I said, always the unknown ones, and those are the best ones.
Yeah, for sure. And if you are willing to wait, I think you can collect a 6% dividend along the way. So
So let's look at NEE, and then that's the last one. We'll shut it down. H-Chan, I'm
NEE,
sorry we did not get to GMed. We'll try to hit that on Thursday. And as
Next
always,
Era
you guys can
Energy.
just email us questions at stockmarketmedia.com. It's right on the bottom of the screen there.
Do I have this one right, Patrick? Next Era Energy.
Yes, NEE. Yep.
Wow. All right. So let's talk about this uptrend. So this one's up about 11,000% from its 1975 low. So This one can move. It's in a long-term uptrend. It's $136 billion, so it's a big boy. And I believe they have some nuclear going on there. Is that accurate or no?
Um, I'm not exactly sure. I know it's the largest in the XLU, so it's the largest utility, I believe.
Sure.
Um,
It doesn't quite look like the AI
yeah,
utilities. Like, it's
but
been hard
by
for me
a
to
big margin
ignore
too.
this GEV. This is like the
Oh,
bellwether
yeah.
of the AI utilities.
I know. Talk about relative strength. That one's holding up fantastic.
Yeah. So
Or I
this
mean,
is,
I didn't check it today, but
yeah, it's another
last I
good
checked
day.
on Friday, doing all right.
So this one is going in the wrong direction, making new. Let's see how many days this is. About 250 days. That is the lowest price we've seen in 250 days. So it's not something I typically want to buy. I see this more as some type of short-term distribution pattern,
Yeah,
but it
and
is in the context of a long-term mess.
utilities were actually one of the only positive sectors in the first few weeks of the new year. So, yeah, having the leader in the space or the biggest in the space, yeah, that's interesting.
That is very interesting, for sure. If you're looking to short it, I think you want to look at. Let me redraw my fibs. Um, so I'm taking a fib from this October 2023 low to the peak here in September, October of 2024. So we've pretty clearly broken below the 71 level. I think you could short this one from here down to 62.
Yeah, that level's been, I mean, so key since even before the pandemic. That's pretty
Right,
much been the level.
right. Yeah, a lot of bag holders there. No, I like shorting this one. You could even do some type of pair trade, uh, buy the utility sector and short this one against it if you want to get cute. Not really for me, but I see the
You buying the
trade.
NEE and or are you buying the GEV and shorting NEE?
Yeah, man, you could even do that if you want to make it even cuter. Like, look at this. That
Oh
is
man, that
one
ratio.
hell of an uptrend.
That ratio is really something.
Yeah, you've made 200% since last April. So, um, I don't hate this at all. I see it.
Well, Sam, I think we gotta shut it down here for the day, but can I get your nomination for chart of the day, so to speak?
Yeah, that last, what was that utility? No, the pipeline we were just looking at from Wavy.
From Wavy,
Yeah,
Bridge, ENB.
yeah, E and B.
Yeah, I think that one's really interesting there. Like you
Yeah,
said, might need more time. It could fail, but definitely one to keep on your radar there. A
for
10-year
sure.
base. What's not to like, right? 10-year
Yeah,
base.
it's a nice chart. What about you, Patrick? What did you like?
I gotta say, shout out to Mr. Zerby for putting the Vital back on the radar. I
I
think that's
figured
really
you'd say that. Bullish eggs.
yeah. I'm looking to get stopped out of that one again. No, I think that one's looking really constructive here.
Absolutely, it is.
And
I like that one too.
it's looking a lot like some of these other high flyers right before they got going. Names like Hims and Uber, or even Palantir, just clearing those post IPO highs. You have 17% short interest. I like that too. So thank you guys so much as always for bringing these. We're always super impressed at the way you guys are seeing things. I think I speak for you, Sam, when I say that. Yeah.
And like we have a great community here. It's
Yeah.
really something to be part of. I'm very blessed.
Well, if we didn't get to your ticker, be sure to email us at questions@stockmarketmedia.com and we'll get to them on Thursday. Come back at 1 o'clock. And me, myself, Sam, or Alfonso will be breaking down the charts for you. Thank you guys. Have a good rest of your day.